What's good, everybody? Welcome back to another YouTube video. Hope everyone's been doing well. Today, I'm gonna be going, just doing a quick trade recap of the 2.5R short that I caught today. And I think price action was pretty clean today. Straight up, we just dumped right off open. And I'll be going over like what's usually my thought process when we're near all-time highs, especially like when is the point that we start looking for shorts, for example, right? So let's get right into it. So going into the day, this is what the chart looked like on the hourly for New York Open. Since we are at all-time highs, even though we're going down here, you can see we're obviously in a bearish trend, especially if you look at the 5 minute here. We've been going down since what, 7 o'clock. Usually in all-time highs, you want to be looking for longs. At all-time highs, what you'll see is that you want to be looking for, you take a swing low to the swing high here, and then you want to see sort of a retracement, a good strong retracement. The more the retracement, the better or higher percent chance, like the higher the win rate will be for your long based off the retracement. So if I'm looking here, I would probably be looking at one of these gaps, these hourly gaps right here being hit, like OTE area right under here, using the fib tool, and ideally retracing somewhere down into here and then continuing up, because we're all-time highs. We go up, find a good retracement down, and then find a place to enter long off that. That's what I was thinking, going into New York Open today. So liquidity I was looking at here was, of course, this fair value gap here. And then there was also London lows right here, which was a no wick hourly candle. And then in more extreme cases where we would dump significantly, then if you look at the 4 hour and look at this leg right here, starting from this swing low in here, you have, you pull out the fib, and then you see how this 4 hour fair value gap here is perfectly aligned with the OTE. So, I personally don't bottom tick, but that's something those people would look at if that was their strategy. You know what I mean? So these were my three key areas to, look for longs, but then also if it was like a free setup, my discretion, that we're going to deliver to one of these three key areas, then I'd be willing to take the short too. So let's go over the potential setups that you could have taken or I did take. And so one of the main ones that I saw today that people posted online was this 1 minute long right here. And so boom, right here. So the bullish 4 hour fair value gap is right here. And then we had a 1 minute inverse. But the thing is, like, this low, like, didn't even, right here, this is the swing low right here. Like, it edged a 4 hour bullish fair value gap. So like, if you took this 1 minute long, it was like, it would have been so much better if you would have waited for price to come in, tap into this bullish 4 hour fair value gap, and then go up. And that's just like a pattern. That's not like, oh, I would take the trade for sure. But it's like you're edging a drawn liquidity and then trying to take the long. Like, you should be shorting to this drawn liquidity, but instead you're taking the long when it just missed it by a couple points, And also it wasn't good because one, it edged the 4 hour bullish fair value gap. And then this is the 1 minute right here. And then there was a 30-second fair value gap right here that didn't get inverse. Like, the 1 minute got inverse, but the 30-second didn't. And so just some secret sauce here. I personally don't even really like the 1 minute. Like, for some reason, from my experience, like, the 30-second is so much better than the 1 minute. Like, a lot of times when I see the 1 minute inverses, but the 30-second doesn't, like most of the time it loses it. I mean, you could go try it out for yourself. Let me know if you see it also. But from what I've seen, like my discretion, like if it inverses on the 1 minute and doesn't inverse on the 30-second, then it's like that's sus. But I mean, of course, if it inverses both on the 30-second and 1 minute, then that's great. So I actually made like a YouTube short TikTok on this trade. So that 1 minute long fails right here. And then finally we come down, sweep this low and tap into the bullish 4 hour fair value gap, which is one of the draws on liquidity that I wanted to hit before we, all time highs go look for longs. So after we swept this low and tapped into the bullish 4 hour, I'm looking for longs here. And I saw that this 30-second fair value gap opened right here. And this is a great time to look for reversals, especially into higher time frame unfilled fair value gaps. So I went on the 15-minute and saw that this 15-minute fair value gap opened here. And here I'll mark it out. The high doesn't really matter, I guess. So the 15-minute fair value gap opened up and it is marked it out here. So what I wanted to see was I have my break even point right here. So ideally what I was looking for was just a simple 1-to-1 trade. So like hopefully we inverse it here, stop loss near the low, and then, just go for like a 1-to-1. So I was like, I know this is going to hit. Hopefully we get a good candle close, but it's trading. So things don't always go perfectly the way you want it to. So this candle just shot up way above the 30-second FVG here and hit the break-even point before the candle even closed. So therefore the trade was invalid. And not gonna lie, it was sad watching my trade, basically hit TP. And then, I followed my system, followed my rules. But it sucks that you missed the entry because of it. But in the long term, it works out. So not gonna be too mad about it. All right, I don't want to go over like every single trade that I took, so I'll go straight to the one where I hit the 2.5R. What was going through my head during this time was, even though we tapped into the 4 hour bullish fair value gap, would there be a reason for us to continue going down? And so it's like, oh, if we come up here, like we came down here, tapped into, this is where the 4 hour bullish fair value gap is. Like if we come up here, what does it tell us about the liquidity we took out down here that would make us want to finally go up? Or would we just want to retrace into this 15-minute fair value gap that I targeted on the long and then continue down to get something that we left? Or eventually we'll go up, right? It's hard to 100% explain, but a huge part of it is just like market experience and discretion, right? So we came down right here and left relatively equal lows, and I just wanted to see the reaction we had when we finally did tap into this 15-minute bearish FEG that we formed right here. Because I know that we are so bearish. Like off market open, we've dumped 200 points, So basically you compare and contrast. Like we came down here and formed relatively equal lows. And then I want to see the reaction off the bearish 15-minute fair value gap, right? But what liquidity is there to go up for, besides being at all-time highs? Like this 1 hour fair value gap, bearish fair value gap, hadn't formed yet at the time. And there was a 30-minute that also didn't form yet at the time. And so the only one I could think of was the 15-minute, and it already got tapped into right here. And so if I saw a good reaction off the 15-minute bearish fair value gap, I could see price coming down one more time to take out these relatively equal lows. But then also, of course, it's going to take out a low and then take out a little bit more. So I didn't want to target this low precisely. Maybe if this was like an Asia low or London low, I would have targeted. Notice how it perfectly took it and then went up. I wanted to go a little bit safer and target a body that was below the relatively equal lows right here. And so I went on the 5 minute and saw the body of the 5 minute that was about 25 points away. So I marked out the body of the 5 minute here, and then that was my target. Like if it swept out these relatively equal lows, it has to go down and take something else before it goes up. You know what I mean? If we're on a downtrend, like we stop going down and begin to pull up after we take something like a draw on liquidity. And then that's when we pull up typically, you know? So right here was where we tapped into the 15-minute bearish fair value gap. And I like the reaction that we got. And actually you can see my executions here. Like I took this short right here, looking for these lows, and it ended up being break even. This was my break even point right here. And then so you just basically, you know where price wants to go. So if we're on a downtrend like this, and then this is our target, then I basically wait to enter again somewhere right here, and then I go short. And then so where does that look like here? Like we went down like this, and then the pull back up into here, which is this part. And then I look for a second entry because I was confident in my draw on liquidity. So we entered right here, targeting the 5 minute body that's a little bit below the relatively equal lows. See, I entered right here off the 30-second. I posted a TikTok and YouTube short for it today of my live execution. But yeah, hope that makes sense to you guys. Trading IFEGs is a lot of, market experience and discretion. That's what really sets different traders apart. And the main thing for me was that I didn't really see good targets above anymore. After it hit the 15-minute, I knew that there wasn't a 30-minute or 1 hour or 4 hour forming. So there was a good possibility that we tapped into that and then continued down. And then I just thought in my head about other possible draws on liquidity lower, And I think it really helped that we formed relatively equal lows down here. Alpha Trader was low-key tweaking the whole time I was trading today, but still made it through. And I'm happy that Alpha Futures is giving everyone who got Alpha Trader 2 free 50K evals. So, you know what? I'm not complaining. I'll take 2 free accounts, and maybe we about to go on a generational run with it. So that means we're going to have 3 accounts. So, but yeah, I hope that helped explain my thought process. I'll be trying to post a lot more long form content and content in general, especially of my daily trade recaps. Hope you guys are enjoying this. Please like and subscribe. Feel free to join the Discord community, link in the description below. DM me if you would like to work one-on-one, and hope everybody has a blessed day.